Welcome to the Money School podcast for December 6th, 2020. What's going on, everybody? Welcome back. It's Sunday night. I hope you guys had a good weekend. Heading into a really interesting week coming up here with some IPOs, a couple Spacks, and then also just looking at the follow through of a couple other Spacks that opened up last week that I think are interesting. Mostly going to talk about those today. There's going to be a lot of content coming over the next couple of weeks. I think this is the most interesting stretch of the stock market that we've had in a long time, coming up over the next 3 or 4 weeks. So there's a lot coming up. We're going to take it step by step. And over the next couple of days, I think the story is going to be all of these new companies coming in: AirBnb, DoorDash, C3.ai. Those are the big ones making waves. There's some others that are coming out, but I think the market is going to free up a lot of cash to pursue those. And then also Tesla going into the S&P 500, continuing to see how that plays out, how that stock performs up to that point, and then also on the date that it goes into the S&P 500 and how it's going to potentially, if they have to buy 15% of the shares of Tesla in one session, I mean, the potential spike in the shares could be tremendous. Also going to be interesting to see how the index funds that are all mirroring or tracking the S&P 500 that have to pick up shares, per their mandates, they're going to all have to buy those over, a tight window of time. And with the high prices of Tesla, it could be interesting to see if other stocks have to get sold and liquidated to create cash. So let's hop into the new stocks coming up this week. We have a couple that are coming up. Most are Wednesday and Thursday. As far as the major IPOs go, on deck first is DoorDash. They're going to finish their pricing on Tuesday night and start trading on Wednesday. They're coming in. It's going to be $95 a share on the high end. Both Airbnb and DoorDash raised their, as late as today, bumped up their targeting of the range of what they're going to do. So I'll actually go through how they price and distribute the IPO, how that process works at the end of this. But the day before the IPO, before it goes public, they're going to finalize a price, and that's what all of the big institutional shareholders, the insiders, that's what their basis is going to be. And then the next day, we'll start trading for the rest of us peasants. If you want to trade IPOs, get early access, like TD Ameritrade, for example, you need to have $250,000 in the account or have 30 trades over the last 3 months, which is actually pretty doable with free trading now. So something to look at. Every brokerage is a little bit different. But DoorDash is coming up on Wednesday. The first day of trading is going to be Wednesday. It's going to open at 95. It'll probably immediately pop just because that's what a lot of these companies have been doing. If it doesn't, there's a big issue. Both Airbnb and Dash are pushing their valuations kind of to, what a lot of people thought was the limit, but the demand for the stock to the public is enormous. So they know what they're doing. We're going to see Dash open around 95. It's probably going to be into $100 pretty quickly. And the valuation for the shares that they're selling puts the company about $36 billion. That's going to be a $40 billion company pretty quickly, would be my guess. If you're not familiar with DoorDash, DoorDash is a food delivery service. Its competition is Uber Eats and Postmates, which are both owned by Uber. And they're just the most focused on food delivery. So a lot of their competition has ride sharing attached to their bottom line. And then they've also really focused, like Uber has really focused on big cities, and DoorDash has taken a different approach of delivering food to people in the suburbs. There's a couple different arguments of, maybe right now is the most people will ever want to use that service. I'm kind of more in the camp of this is a service that people have adopted, and they're going to continue to maybe replace the way they ordered pizza before, or people are going to continue to order food to their phone. I think it disproportionately helps large corporations like McDonald's with, how they do McDelivery through DoorDash. But I think a lot of the smaller restaurants are going to feel some pressure just because there's a large cut that these platforms take when you order food through them. ultimately what's going to happen is consumers are going to choose the best software, which they like, what service they like to have food brought to them, and the industry will consolidate to one or two players. It kind of already has. Grubhub is out there, but in my area, there's not, any restaurants on there. You go on DoorDash, it has the whole city. And I think it's just a market to market approach that they've taken. So, interesting to see how that one performs. That one opens about $95 on Wednesday. And then that leads into DoorDash, or that leads into Airbnb, pricing Wednesday, first day of trading Thursday. Airbnb is the idea that I like the most out of all of the companies that are coming out. Valuation-wise, I think it's going to be, the more we proceed here, the less valuation has to matter, because we're just betting on ideas and the demand for those ideas. And Airbnb, I think, is just an excellent idea that merges the gig economy and the wealth gap and a lot of different factors of just who can own stuff and renting out assets. I think as we move forward over the next decade or two, the amount of people that own things, assets of any kind, are going to continue to get smaller, and they'll find ways to lease them out and monetize them in ways to other people in a more on-demand way. I think Airbnb is perfectly situated for that. I also think that with COVID, when people get back to traveling, I don't know. I think personally, I've had this conversation with a lot of people. I think it makes more sense. Like for my family, if we were going to go somewhere, we would get a house on Airbnb. We wouldn't stay in a hotel. And I think that's what a lot of people are going to continue to do over the foreseeable future. Even after a vaccine comes, I think especially as a vaccine comes, we're going to see people travel, but they might be hesitant to stay, on the Las Vegas Strip. Vegas is a bad example because of their, pushback with short-term rental and all that stuff. But when people go to big cities, instead of looking at that luxury hotel downtown or somewhere where you're going to be right in the middle of things, I think you're going to see people opt for more private space that is just more a la carte, and Airbnb is right in the middle of that. So valuation wise, it's coming in at $42 billion. That's on the top end at 60. They just said on Friday it was going to come in 46 to 50. Today they upped it. It's going to be 56 to 60. They're going to finish that on Wednesday night, start trading on Thursday. It's probably going to be 60. And then you're going to see this stock really explode. It's never going to be a part of the S&P 500 because it has multi-class share structure. It has a pretty interesting one. The shares that are going to be sold on Thursday are Class A shares that have 1 vote. The B shares are owner and founder shares that have 20 votes. The C shares are they have shares set aside for a merger and acquisition, a strategic acquisition or merger, and then the D shares are part of an endowment, a charitable endowment that they're setting up. So the S&P 500 only allows companies that have 1 class of stock. That's a new rule that they've put in place. So Airbnb is going to be outside of the S&P 500, which for a company like that, which is kind of a unicorn, or definitely a unicorn, I think it benefits it being outside of the S&P 500 because that's how money managers are going to get outperformance to their benchmarks of the S&P 500. It's hard to outperform the benchmark of the S&P 500 if you're only being able to choose from S&P 100 stocks that are going up. Having big companies outside of the S&P 500 like DocuSign or Airbnb or DoorDash, I mean, there's still enormous companies that aren't part of the S&P 500. So while they're outside of that, there's extra value as money managers that are trying to find good ideas that are outside of that space, of which Airbnb, I think, will be one. And that's also one that they can explain to their clients. Like, if they lose money, it's easy to lose money owning Airbnb because it's a good idea. And as it grows into it, it probably won't be a loser for long. If you're owning a company like General Electric or Ford that's had a terrible 10 years and you're losing money, it's a lot harder to explain to the people that are invested. So I think there's going to be good demand on that side. And we'll see how that plays out. But there's a lot of money That's $100 billion of companies, between DoorDash and Airbnb coming in within 48 hours. So it's a lot of cash that needs to get moved around out of other comparable ideas and freed up. If you think about every investor that has, maybe 20 grand in their account, if they want to get a part of those, they got to sell something to free up some money. So it creates waves outside of just it, because it's a finite game. There's a lot of money on the sidelines that's ready to pour into stocks and to start getting behind some fresh ideas. And I think that's why we're seeing so much of this IPO and SPAC action. But yeah, that's enough on Airbnb. Let's see how that responds. First day of trading on that is Thursday morning. And we'll know pretty quickly how that's going to perform. The IPO that's most interesting to me personally this week is C3.ai. They make machine learning and AI software, a bunch of different applications. Most of their clients are a bunch of psychopaths. They directly compete with Palantir, which is their own brand of psychopath. But basically, it's a big data analytics machine learning play. All of their customers are these just gigantic conglomerates. This one's interesting to me for a couple of reasons. I love the AI space and machine learning. I like when the Department of Defense and major companies like Amazon are partners and working with companies like C3.ai. And I also like when they're selling 16% of the company. So let's just back up on the value. They're going to sell 16% of the company, which is 15.5 million shares. They're going to open around $33. And they've already pre-sold $100 million to Spring Creek Capital, which are the Koch brothers, Koch Industries. And they've sold $50 million to Microsoft. So they're raising $500 million. They've already sold $150 million to Microsoft and the Koch brother. And that's at $3 billion. So it's a small company. They're selling a small float, and then you're getting in bed with super deep pockets. And also these big data plays, they're not going to talk about this in the ESG, like what's good for people investing. But this big data analytics, it's a super dicey. They're going to say it's for preventative medicine, and it goes really quickly into predictive policing and infringements of rights. And it's a weird space, but so is artificial intelligence. To think that this company is only $3 billion of value is insane to me. So I think this is one where there could be a really big spike in these shares. They're coming in at $32.50 is the initial pricing, and they're going to price on Tuesday, start trading on Wednesday. So that'll be interesting to see. This is one that'll probably be a large spike just because we're getting, if the Koch brothers and Microsoft are getting in at a base price, it's probably going to be rationally priced for the insiders, which will lead to a big pop on the opening when it first starts trading. So that's what my guess is on that one. That's what I'm actually looking forward to more than Airbnb and DoorDash is C3.ai. So that's going to trade ticker AI. Airbnb is going to trade ticker ABNB. DoorDash is going to trade under ticker Dash. Those are the big three on the IPO front. There's another company called Hydrofarm that's coming out, which I think is really interesting. It's another one. I like the smaller companies. I think the market is hungry for fresh ideas that are smaller, that have more growth potential, that are domestically based, that have a lot of upside and, a high-end total addressable market. So Hydrofarm's coming out. I think that ticker is HAYM. Google it. There's a good Seeking Alpha article on it. But they basically do like vertical hydroponic growing of a whole bunch of different types of, vegetables and shit like that. So Hydrofarm is one that, there's only so much money in the mix that these companies are going to be fighting over these fresh dollars. So either the existing market's going to have to come down or fresh money's going to have to come in. But Airbnb is going to kind of go last in this cycle. And by the time that they get there, there's going to be a lot of oxygen sucked out of the room by Thursday of this week with, as far as fresh dollars go. The other two companies that I have my eye on this week are both Spacks. SPACs are similar to IPOs, and I want to break that down just really quickly. Oversimplified, don't at me. There's 3 ways for a company to go public and share and sell its shares on the public market. So the first way, the traditional way, is an IPO, where a company goes to a couple big investment banks and they sell a certain percent of the company in the form of shares to, call it, 5 investment banks: Goldman Sachs, Morgan Stanley, the big banks that you've heard of. An investment bank who has the market then creates the market for the shares. So company wants to go public, they want to raise money to invest in the company or to, build a new factory or whatever they're going to do with the money. So you say, we're going to sell 16% of the company at $32.50, and we're going to raise $500 million. That's what C3.ai is doing with their IPO. So they sell those shares to the underwriters, the Morgan Stanleys and the Goldman Sachses. And then Goldman Sachs goes to their customers that have 250 grand, their high net worth clients, and they let them subscribe to the IPO. And then the day before the IPO, they finalize the pricing, and all of those people then they get the notice of how many shares they're going to get. And then the market opens the following day, and the public can trade the remaining shares, which are actually being sold a lot of times from those initial market makers. Then it gets chopped up. So think that they are buying the stock, the market makers, the investment banks, they're buying the stock wholesale, and then they're turning around and exclusively selling it retail to their clients and then to the public. So when you get an IPO, you're always getting it last. And that's the problem that a lot of people had with it, was that by the time you get to Airbnb's IPO, publicly traded, available in your just Robinhood account, I can buy shares of Airbnb, you're paying the very highest valuation that anybody's ever paid to own those shares. So there's to me, it's immoral in a lot of ways, because the companies argue, we want to sell our initial shares to larger investors that aren't going to turn and flip them, and that's going to make our company more stable. Like, those people aren't going to do that anyways. It's a joke. So that's why, they're not bringing in Robinhood to underwrite their IPO. They're bringing in Goldman Sachs, because then Goldman Sachs already has all of the customers to distribute to. A SPAC is something that's different, where there's an acquisition company and they're given a blank check to go and acquire a company and take them public through a merger process. That's called the special purpose acquisition company. That's what a SPAC means. IPO is an initial public offering. With a SPAC, you have a company that's just normally led by one person or a group of people that have a high reputation. Like, my favorite is Chamath Palihapitiya with Social Capital. He's a brilliant guy. He's a smart person. He puts his own money in. And there's all of these different companies that are just blank check companies. And the first one he did was Virgin Galactic, took them public, been a huge success. And there's other ones. There's a ton of them. This is a really popular process because it's more flexible than the IPO. So what happens is, like, there's a company I'm going to go into here, trades as TRNE, and on the 10th of this week, they're going to be DM, and that's the acquisition process of Chamath Palihapitiya, who led the PIPE round, which is TRNE, the acquisition company. They're closing their merger with Desktop Metal, and then on the 10th, the ticker DM is going to be a new ticker that's going to be available, and that's going to be the post-merger ticker symbol, and that'll be out this week. You can still own the acquisition company TRNE now before pre-closing of the merger. That's when you want to own these SPACs. By the time you get to the closing date, again, it just becomes a different investment, and you got to hold it longer term. So Desktop Metal is a company that makes electric 3D printers for factories. So it's being pushed as a environmentalism play. The acquisition company says, okay, you're a private company. We're going to merge with you, and then we're going to change our symbol, and now we're going to be a public company. And that's what the SPAC process is. The third process is what Slack did, which is a direct listing, which is actually also led by Chamath Palihapitiya, who also was one of the original people in Facebook that helped build the company. I mean, he's a brilliant person. And he did the Slack direct listing where the company just lists the shares themselves and they don't raise any capital for them, in particular with leverage. And that's had mixed results over the last couple of years. The SPAC results have been much better for shareholders to the upside. That won't continue forever. And the IPO process is a mixed bag. Again, the stock market is just a gambling machine for ideas, and people are putting their chips on the table for what they think, moving the capital around to make the ideas humanity wants to pursue real things. So as we move that money around, and we do a lot of that through the public capital markets, participants are finding ways to be more creative to get their ideas to the market. So that's why we're seeing more IPOs, and then the derivatives of IPOs with SPACs and direct listings. And the last thing I have my eye on this week is a SPAC that actually started trading last week. Luminar Technologies trades under the ticker LAZR. They just minted the first or the youngest billionaire in the self-driving car space. He's 25, brilliant young guy. The company makes laser software or laser hardware. I'm assuming there's actually probably software attached to that, but they make laser technology for self-driving cars. And that stock has been on a run. I have a little position in there. It's supposed to open up. It's trading at 31 right now. It's supposed to open at 32. And it's been on a nice little run. So keeping an eye on that to see if that can hold momentum, or if those people playing that momentum dump that to hop into the momentum of the new IPOs and SPACs that are coming up. So, again, it's a zero-sum game. There's always winners and losers, and a lot of the stuff that I trade and own is correlated, so there's either going to be a movement together or there's going to be an opposite movement. Ending this episode, I wanted to give a special shout-out to my grandma. She's no longer with us, but today would have been her 100th birthday. She was a really important person in my life and somebody I always really looked up to, as she is relevant to the money school. Outside of my existence, is she was born in 1920, and she was born to parents that didn't speak English, and she ended up teaching them English as she learned it in grade school, and worked really hard her whole life. And she worked at Sears and Roebuck in a couple different roles, but as a clerk, and took the stock option, or took the stock forever, and worked there and never touched it. And as that company grew through the decades, it became an amount of money that, by a lot of standards probably wasn't enormous, but it changed my family's life. And I graduated from college in 2009, and that was the year I graduated in 2009. She passed in December of 2008. During my last semester. And as the world was kind of in chaos and the stock market was collapsing and the world was falling apart, I didn't know what I was going to do, and I didn't know what the future had in store for me. And it felt a lot like what the kids are going through now must be feeling, graduating from school and feeling like those degrees were maybe a bad investment in yourself or whatever. I interviewed for a ton of jobs, and I wanted to pursue a career in real estate, but starting a job on 100% commission just wasn't going to happen for me right out of college. And unfortunately, my grandma passed away, and then I came home for her funeral, and I interviewed for a bunch of jobs while I was down here, and it was a really hard week, and I ended up meeting my first boss in real estate, and I wanted to do it really bad, but I knew it was just not possible. So I went back to school and I was finishing up my degree in finance, and I got a call from my dad, and he said, you're not going to believe this, but your grandma, she left you, she left us this, and this is going to be a little part of it. So, if you want to do this, then you're going to have, a couple months of breathing room to try it and just go do your best. So I remember where I was standing when I got that call, and I called Cheryl, who became my first boss, and I said, hey, I'm going to be able to try this. Is there room for me? And she said, be here June 1st. So I started June 1st, 2009. And after graduating, and that first little bit of opportunity came from my grandma working her ass off her whole life and saving her money and being conservative with how she spent it and staying invested, and how that money became more than money. It became an opportunity for me, and that opened a door for me, and I've used that to open doors for others. And that's part of the reason why I love doing what I'm doing now, helping people save their money to create opportunities like that for their loved ones. Because I know firsthand exactly what it can do and how it can change somebody's life. So shout out to my grandma Eva. She was the best. I miss her all the time, but she was a tough person. And I think about now the stuff we're going through as a culture and a society, and how tough just all people were. We come from tough people. And I think about what she had to go through to exist in her life, and it makes me feel like I can go through anything. And I hope everybody can draw on that, because that's what we all come from in one form or another. I'll leave it at that. Shout out Grandma Eva. Love you very much.